Welcome to Wealth Preservation Solutions. I'm Elizabeth DeLeo, Director of Family Offices. Kevin Ellman, CFP, our CEO, is here today to talk about his monthly outlook and the components that compile how he feels about where the market is and where it's headed. Good morning.
Morning. How are you?
I'm very well, thank you. We're here on a bright day, right?
Right.
It's pretty bright. I don't know. I may or may not be adding to that brightness, but we'll just go with it, right?
Go with the flow.
Exactly. So a couple of months ago, it's hard to believe, but it was a couple of months ago, we hopped on here and we talked to our audience, our clients, prospects, partners alike about how you actually form your outlook and how then that is applied toward your recommendations with our clients and during our client appointments. So today we're just getting back on track with that. And we're going to talk about the updates that have taken place from your viewpoint from then till now. So why don't you get us started?
Sure. Well, you said something which I think is an important point, and that is you can't look at the market or the economy on a day-to-day basis. And a lot of clients, I know they look at their account every day and they get nervous or they get excited, and it creates a lot of stress. And I always think it's a little bit better to step back a little bit so you can see a trend developing. It's very hard to see a trend week to week, but month to month or quarter to quarter, then you start to see a trend. So I think we are seeing a trend here. So we look at 6 different factors. We look at what is the Federal Reserve doing. Clearly, right now, the Federal Reserve is committed to keeping rates lower for longer. There's really no talk about changing that. And I don't really see anything that's going to all of a sudden make the Fed decide to tighten monetary policy.
Right.
But we still think that's, and the way we look at it, we think it's a 4 out of 5. So it's pretty positive. The big thing that most people are talking about is inflation. Everybody's been worried about, inflation, what's going to happen with inflation? And I have a little different perspective. I think of it more like reflation. So, last year, the pandemic caused a lot of damage, and a lot of business had to close or stop doing business and lower prices. So we think things are kind of getting back to normal. And I don't particularly see anything that's going to cause inflation to get out of control. So, last time we had inflation at a 3, this time we're making it the 2. So it's really not as bad. I think that the inflation picture is slightly improved. And of course, the next factor is growth. So the economy is definitely growing, mostly because we're getting back to normal. Restaurants are opening, airlines are traveling. I think even cruise ships are starting to cruise again. So the world is reopening and starting to get back to somewhat normal, although it'll be different.
Right.
So the other big factor, of course, is regulation. And while there's a lot of concern that this administration may tighten regulation, hasn't really happened yet. There's talk, but it really hasn't happened in any significant way. I guess in that category, you might put the infrastructure program, which again, there's a lot of talk, hasn't happened yet. I personally think something will happen, maybe a $1 trillion plan, which is not nothing.
Right.
I think that's going to happen. I think that'll be a positive for the economy, but it hasn't happened yet.
Right.
When it does, we'll factor it in. To me, the big thing that's changed since the last time we spoke is employment. Everywhere you read, it says that the employers can't find people to do the jobs.
Right.
And I read an article that teens this year are being employed at a much higher rate than ever before. And, so that this is a concern. Wages are creeping up in order to get people to come to work, but I don't think it's to the point that it's onerous. So I think it's more of a positive that people are working, they've got money to spend, but it's not bad enough to cause rampant and runaway inflation.
Right.
And then the last component is taxes. So there's a lot of talk that taxes will go up. I think we'll probably see a capital gains tax increase. We may see an income tax increase. There's less and less talk about seeing an estate tax increase. So it hasn't happened yet, but it could happen, and most likely will happen. The taxes will go up, and that could be a damper a little bit on growth and economic activity. So you put that all together, and we give it a 20 out of a potential 30. So it's slightly better than average. I would call it, moderate, modest growth. but it's definitely forward.
Mhm.
So based on that, I think the economy and the stock market is going to be doing better at the end of the year than it is today.
Mhm.
Therefore, we're going to keep our asset allocation the way it is. We're growth oriented at this time, depending on the client, of course,
Mhm.
but we're not moving money out of stocks.
Okay.
That's where we stand.
Okay, well, thank you for sharing that. And certainly, everyone who's watching, if you have any questions, comments, feedback, concerns about anything that we're discussing, the best thing to do is to reach out to us directly. And there are various ways of doing that. But I always say, when in doubt, check us out online. Our website is wealthpreservationsolutions.com. And I also would like to take a minute just to remind everyone that Kevin and Paul recently published their new book. And to get a complimentary copy of the book, which is basically just a summary of their entire process of working with us, right? From the client perspective, the client experience, from soup to nuts, what a day in the life of working with wealth preservation solutions is like. And it encompasses everything, which is our 360-degree family wealth management strategy. And to get a complimentary copy of that, you may text wealth to 88799. Again, that's wealth to 88799. And certainly we'll be seeing all of you soon throughout our various review meetings. And hopefully we'll be seeing most of you in person over the coming months. Till then, stay happy, stay healthy, and stay wealthy. Bye.